Welcome back to the Video CPA. Tax season's over. I know it's been a few weeks since I've done a video, but I'm still preparing income taxes, so I've been pretty busy. But anyway, today I wanted to talk about the cash basis of accounting. So there's two main bases of accounting that we're going to talk about. One is the cash basis, and the other is the accrual basis. Okay. We'll talk about the accrual basis in the next video. But in this video, I want to talk about the cash basis. The cash basis is a little bit easier and used a lot by small businesses. So we're going to talk about what it is, who can use it, and the benefits of the cash basis. I'll also mention some of the drawbacks of the cash basis too, but I don't have those listed in this video because when we talk about the accrual basis, most of the benefits of the accrual basis will point out what the negative parts of the cash basis are. So, got our disclaimer as you see every time. So, the cash basis of accounting is a major accounting method, a system if you would, used in financial preparation and in tax return preparation. And the main thing is it recognizes income when you receive the income, when you receive the cash, okay? And it recognizes expense when you pay the cash out, all right? So that's it. That's the cash basis in a nutshell. Now, most people don't use a 100% cash basis. It's usually a modified cash basis or something like that, but the thing to remember is that you pay tax on it when you receive the cash, okay? It's counted as income when you receive the cash, and it's counted as expense when you pay the expenses out in cash. Now, it could be a check, okay? It doesn't have to be real cash, but they also talk about, the IRS talks about constructive receipts, so if you have constructively received that income, you've got to declare it. You can't have it sent to someone else to hold for you until after the end of the year. And so the cash basis and the accrual basis are on a year end. I mean, so the cash basis is a very strict year end, and if you receive the cash by the end of the year, it's taxable in that year. If you pay the expenses out in cash by the end of the year, it's deductible in that year. So a few things to remember about how the cash basis works. Almost all individual tax returns are prepared on the cash basis. I haven't seen an individual tax return that's been done any other way. Most small businesses recognize revenue and expense on the cash basis as well. So what you're looking at here, I mean, you will have the choice. If you start a business, you're going to have the choice of picking the cash method or the accrual method. Once you pick that method, once you adopt that method, well, then you're stuck with it without getting the IRS permission to change your method of accounting. Now, there are some drawbacks to that. I mean, if you pick a method, for example, that's not allowed by the IRS, you can actually file an amended return and change your method if it's done within that first year. But you cannot file an amended return to change from the cash method to the accrual method or the accrual method to the cash method once you've adopted one of those methods, okay, without getting IRS. Well, the amended return won't work. You've got to file a form with the IRS that says, hey, I want to change my accounting method, and the IRS has to agree with you on that, okay? So it's not a real easy change. So when you file that first return, you need to be aware of which method you want to use, either the cash method or the accrual method. If you're a small taxpayer, I would advise you use the cash method, okay? Then you're not paying taxes on income that possibly you haven't received, okay? But taxpayers other than tax shelters can use the cash method of accounting if their average annual gross receipts for the prior 3 years are equal to or under $26 million. Okay. Now you can see that's a big number for most small business owners, and so As long as your gross receipts are under that, you can use the cash method if you want to. All right. And that goes with C corporations too. C corporations are usually required to use the cash method. Usually required to use the accrual method. But if they fit under this 26 million or less category, they can use the cash method. S corporations can use the cash method. Okay, and but when you do that first tax return, this is, for example, the Schedule C on a small business, you can see that under item F there, when you file that first return, you've got to say you're either cash or you're accrual or you're other. And if you're other, you have to specify it. And so you might be, say, the tax basis. You might be a modified cash basis, or some other basis of accounting. But the main bases are cash and accrual, and that's why I'm only going to talk about the two of them. But we used to prepare a lot of tax returns and income statements on the tax method because you would prepare your tax return and then you would want your financial statements to look like the tax return, so tie into the tax return. So that was very helpful using the tax method, for example. But the tax method is basically you're basically still on the cash method. So I would advise, if you're a small company and you're just starting out, to use the cash method. All right. Benefits of the cash method. Easier to learn, implement, and maintain. You recognize the cash when you receive it. You recognize deductions when you pay it out. You're only taxed on the difference between what you collect and the cash you actually pay out. So your income is the difference between what your earnings are, or what you've collected in cash, and then what you've paid out, and that's what you pay tax on. Which, with the accrual method, when we go talk about the accrual method in the next video, you'll notice that is not necessarily the case. Okay, and the cash method provides a clear picture of the amount of cash possessed by the business. I mean, you can look at the cash method, look at your bank account, and it gives you an idea of how much cash you actually have. So it's a good method in that respect. Now, there are a few things wrong with the cash method, and that's why it's not really accepted for general accounting principles, accepted accounting principles for preparing financial statements, audited financial statements anyway. And so one of the main problems is it doesn't give you a good view of the balance sheet of a company. Okay, you don't get an idea of what the accounts receivable are. You don't get an idea of what the accounts payable are. Okay, generally, if you go out and buy a piece of equipment and you've got a bank payable to the note, you'll put that note on the cash basis, which really is a modified cash basis then. But we used to carry those notes and stuff, so banks and financial institutions would know really what's out there and what the debt is. But in most cases, we didn't have accounts receivable or accounts payable. Cash method is mainly used by service-type corporations like accountants, lawyers, attorneys, doctors, construction guys, that type of thing. Usually companies without inventory. If you have inventory, you might want to explore using the accrual method, or you may have to use the accrual method in some cases. But if you look online, some people will tell you have to use the accrual method if you've got inventory, and that's not really the case. But look at it. I mean, if you've got a company with inventory, you need to explore the accrual method, which we'll be talking about in our next video. So, benefits of the cash method is easier. If you're using something like QuickBooks, you have to declare in QuickBooks what you're using, cash method or accrual method, and then your financial statements will be prepared on one of those methods. And actually, you can switch back and forth and see which financial statement you like better. But for the IRS, you're going to have to stay with what you originally declared. All right, so it's good to have you with me. Good to be back again. It's important to realize how these methods work, because this is how your tax return for a business is prepared, and you need to make sure that you're doing it right, and that you're using the method that you choose correctly. So again, thanks for being here, and stay tuned for next video on the accrual method.